It's a great discussion there with Chairman Giancarlo and Councillor Phillips, and I'll add to Tim's thanks to each of them. A great notion of the 21st century regulator that Chairman Giancarlo outlined, with both the outward and inward focus. I like the way that Councillor Phillips referred, firstly he foreshadowed the greater emphasis on digital identity, and if I can quickly call out that this is an area we'll have an amplified focus on at the IIF, and we'll release the first in a three-part series on that very shortly. But he also talked about the challenge of the intersection of traditional regulatory structures and mandates, perhaps, with some of the emerging data issues around data privacy and data protection policy, which is a great segue into our first panel discussion of the day on open banking and consumer data. Before I welcome our panellists to the stage, I just asked you again to take out your mobile devices, and we're going to have a quick poll just mapping out some of the key challenges and focus areas. What is the main challenge financial institutions face to compete successfully in the new data ecosystem? You have the three options there of the necessary investments in data management, gaining access to new types of data, and building consumer and societal trust. You got a sneak preview of where the count's already at on the screen a moment ago, but if you haven't already voted, I encourage you to do so. And if we can get that up again to have a look at the results. Necessary investments in data management and AI technologies initially making the early running, but the notion of consumer and societal trust very prominent there as well. Okay, so let's move into the panel discussion, and we're delighted that Andreas Portilla, our Managing Director of Regulatory Affairs, will moderate this session. Please welcome Andreas and his panellists, Linda Zheng, Chief of Staff for Risk, Surveillance and Data at the Federal Reserve. Linda is also the Chair of the Bail Committee's Working Group on Open Banking and APIs. Tim Jones, Head of Innovation at Transamerica, and previously a Presidential Innovation Fellow. Carlos Orta, partner and functional leader of regulatory compliance at Deloitte, and previously the Vice President at Mexico's National Banking and Securities Commission. And Andreas Wahlbergstock, Head of Digital Policy for Consumer Banking at Citi, and a very active contributor within the IIF, certainly one of the people I most turn to as a sounding board when I'm needing some practical insights. Lastly, just a reminder to submit your questions via the app. Those will come through here to Andreas. Andreas, take it away.
Brad, thank you. Thank you for that introduction, and thank you for my fellow panelists for taking the time to be here today. This is a historic moment, two Andreases in the same panel. That doesn't happen
Never have too many.
Very often. I'm very glad about that. When we were discussing and putting together the program and the agenda for this event, there was clearly one topic that was central to every single one of the discussions. That was data, clearly. And you will see it throughout the day, the different panels having data at the very center as a key topic. I'm not going to repeat what has become a cliche about data being the new oil, which actually was not invented by the economists. They didn't come up with that phrase. It was really a mathematician in the UK who invented the Tesco supermarket fidelity card, and that was many, many, many years ago. Actually, we could spend the whole panel talking about why data is not the new oil, right? I mean, it's not so expensive or difficult to extract. It's not supposed to be stored idle in some place, and it's actually pretty cheap to transport, right? When we started thinking and talking about data, you talk about how to have and who has access to that data, who owns the data, what rights that person has over the data, how institutions can leverage and use that data. And that's really the basis for my first question to Andres. I'm going to start with you. Leveraging that data is probably the key success factor for a financial service institution in a customer-centric environment in where personalizing services and products is so fundamental. So when financial services firms think about leveraging that data, a number of issues come up. How to access that data, how to store that data, how to protect that data, what to do with it, privacy, et cetera. So help me understand, as a large financial institution, how you think about these issues and what are the key concerns and key topics when you develop a strategy about leveraging customers' data.
I would say you have to think about it in terms of a small number of major commandments, right? So first of all, making sure that the consumer's interest is front and center, making sure that consumers are right when they implicitly assume that anything that can plug into their bank or credit card data is going to be at the same grade in terms of everything: information security, cyber protection, privacy policies, data rights overall. That there are no hidden traps or steps that actually completely change the rules of the game, even though everything on the surface would seem to be connected on the same level. And I think the last one would be advocating or trying to move things in the direction of consumers having broad access to the types of data that will enrich their lives and to which they can genuinely claim some ownership in terms of it being their activities that generated the data. I'm not talking about derived data that a bank or some other outfit has elaborated based on the raw data, but the stuff that you have created, your own data sillage or the wake, that you create in data with your activities. All of our lives stand to be considerably enriched through the proper use of data, and the more so when you are able to cut transversally across traditional industry domains. The boundaries are blurring really rapidly anyway,
Right.
but still sometimes from the industry's own perspective, definitely from a regulatory perspective, we're still looking at things in a very siloed way when people's lives would really stand to be enriched if they had proper access, real time. I'm not saying sort of one-time exceptional portability requests, but real-time access to not only their banking data, but their health data, their insurance data, telecoms, search, shopping, location, the list goes on and on. It's not all at the same level of criticality, but it is probably not a good design principle to begin by zooming in on just one area and then only then sort of pan out and figure out how do you do something with the other areas which are actually much more connected than we're giving them credit for.
Yeah, but from a policy perspective, that would require not one set of institutions, let's say banking regulators, or it's a much more sort of
it has to be a transversal,
right.
And others please disagree, but I just don't think the awareness is there today. When you talk to central bankers today about, listen, some of these things you really should be reaching outside of your comfort zone and thinking not about the actor, but the activity, but you should be thinking about the activity more broadly outside of the confines of what you think your mandate is, because otherwise you're really not doing the right thing for society.
Right.
I mean, I would agree. I think the finance in general and banking in particular could benefit a lot from my core industry, which is tech. So I always give the full disclaimer, even though I work for Transamerica, I know nothing about insurance. In fact, they explicitly brought me in because I know nothing about insurance. But I come from the tech industry where historically, collaboration, across players that may not necessarily at first blush be natural partners has led to great innovations. And there's a great book, for those of you who are like tech policy geeks, Regional Advantage by Annalise Saxenian, where she basically tracks the progress of innovations in the New England Route 128 area and the Silicon Valley area. And the secret is that many of the great innovations in technology were co-developed at the exact same time in both places. But the difference in leverage was greater on the West Coast, where there was a more open, collaborative environment, versus New England, which really borrowed a lot from the old 19th century mill culture, where you worked in a silo and you never talked to the people who worked at the mill just down the road because they were considered the competitor, and the environment was such that innovation was stifled. So I would agree with you. I think there's a greater need for that sort of I won't call it West Coast style, but rather open collaboration, and that those collaborations can potentially bring down walls. But there's something you said that I want to swing back to is around making data available to consumers. The question is, do you think there's a need for curation of that data experience? Because my sense is that by making data available to consumers willy-nilly, there will still be a requirement for there to be an intermediary to kind of curate the experience, to curate the raw data in a meaningful way for consumers. I don't know if you've
refine that oil, right?
Exactly. It's like, if I looked at my telecom billing data and my travel data and my healthcare data, that'd be great, but I'd really love someone to curate this to say, hey, Tim, here's what this means. You've got these different data streams, and here's the net effect of your having, spent a lot of time, on Wi-Fi at the hospital when you're waiting for a checkup. Case in point.
Yeah, to me it sounds a little problematic to think of empowering with agency some supervisor of your data. I would love to think about the consumer being in control, which requires as a foundation the consumer being educated and aware of what is going on with data. Today, a lot of that is subterranean and completely opaque.
Right.
So awareness, education, and then market forces where nobody had to come tell Uber, let's say, that it could take my Google location data and work with my credit card to make sure that I was good for the money before it sends a car to pick me up. That is not because of some sort of godlike data agency orchestrating things. It's consumer needs and market forces addressing those needs.
Right. Let me go to Carlos, and you and I saw each other in Singapore at the FinTech Festival last year, and you were telling me right at that time, Mexico had gone through a very interesting debate about open banking and passing new legislation on this topic, which relates to what Andres was mentioning about, accessing data and customers being able to decide what to do with the data and then tell their financial institution, I want that data to be available to other actors. Could you tell us what was the debate in Mexico? What was were some of the key considerations, customer rights over the data? What were the key issues being discussed when that legislation was passed?
Thank you, Andres. As you know, last March, the Mexican Congress passed a FinTech law. And one of the chapters of this law is related with open banking. No? So APIs are at the center of the law, and the CNBV will have to issue the regulation in order to share data from the banks or from all financial institutions to any third party. In the discussions when the law was being done, there were many concerns. For instance, who is the owner of the data? No? Financial institutions used to keep that information from themselves, and now the law changed that, and now the law is making compulsory for all financial entities in Mexico to share information in 3 levels. The first one is public information from the financial institutions, like where are their branches, ATMs, hours of service, among other things. But also there is transactional data from the clients that they will have to share with any third party that complies with regulation that is going to be issued next March. So this was at the very center of the debate, the ownership of the information, and now it's clear that the information, at least in the case of Mexico, thanks to the law, is from the client, and the client may decide who can have access to its information, and for what period, for what time, for what purpose, that is going to be defined by the client. But also, financial entities will have to share aggregated data. And this is a concern from financial institutions, because the law is written in a way that once that the secondary regulation is published, then financial institutions will be obliged to share, for instance, where they provide credit, which is their default rate, which is their probability of default, and other things. So this might create some disturbances in the way that, for instance, financial entities, banks, are giving credit. No, and also the law, as you were mentioning, is not comprehensive for all entities. For big techs, for instance, can provide credit in Mexico because credit is not a reserved activity, but they will be able to ask financial institutions about their information on how they give credit in some places. So, but financial institutions won't be able to ask fintech companies about their
So no
information of their
reciprocity
clients. So
in the
there is an arbitrage
Right.
that is being discussed in Mexico. But also there was the issue of the price of the information. On the first draft of the law, it was supposed to be free, but then financial entities argued that they collect information, they have systems to have that information in place. So the law, the final law, established an authorization to charge the commissions that will be authorized by the authorities. And also these commissions won't be differentiated among participants. It will have to be the same price for anyone so that financial conglomerates do not give a better price to their own
Affiliates,
financial entities.
right.
And those were some of the issues on the center of the
And
debate.
if I can jump in on that, to me that triggers a bit of a reaction because when you, and you know this much better than me, but when you look at the details of the text, there's a provision for a state-driven committee that is going to decide which data elements banks need to share and pricing, how much they should charge, etc. And I think it's worth, if we look, and Linda's probably best placed here to give us the global picture, but when you look at a sort of notional spectrum of the possible ways to encourage open banking, that level of granular direction by the state would probably be towards one end of the spectrum, the other end being maybe the United States, where Councillor Phillips and his team in their report last year essentially said, we would like to see the industry altogether, the financial services industry, banks, incumbents, newcomers, come to a system on their own for the sharing of this data,
Right.
and there should be no government action unless they cannot get there on their own.
Industry-led.
So that's a completely different approach. And I think when you listen to the alarm sounds coming out of the European Union these days as to how the Second Payment Services Directive, with all its good intent, is, in the words of one big open banking advocate, headed for a catastrophe that's going to impact millions of consumers, technical reasons, poor planning, etc., it really does raise the question in my mind of is it possible for governments essentially to get into that level of granularity with good results, or is the market-driven approach preferred?
So Andres, that's a great segue for asking Linda, from a public sector regulatory perspective. The Basel Committee has started to look at these issues. You're leading some of that work with your colleagues from over 20 plus jurisdictions around the world. Help us understand how the official sector is thinking about the issues around data.
Sure. So first of all, I have to give my regular disclaimer that we all have to give at public speaking events. None of my remarks are those of the governors of the Federal Reserve System and fellow staff. They are my personal remarks, and in addition, you're catching me in a transition. I'm going to be moving on to Georgetown Law School to be a senior fellow looking at these issues. So I'm wearing two hats today. I was thinking about this panel, and you know, in preparing for it, the scene kept coming into my head. Like, I don't know if you guys have read this novel by Virginia Woolf called Mrs. Dalloway. There's a scene post First World War England of this high society woman sitting in a car for the first time, and she's driving through the English countryside, and trees and grass, bushes, they're all like whirling by her, and she's in a daze, and at the end of the ride, she almost faints. I wouldn't say that bank supervisors are that bad, but in many jurisdictions, we are in the passenger seat.
Right.
A lot of open banking developments are driven by competition authorities, because they want to create more competition in the banking sector. They want to unstick deposits, and so they began implementing these reforms. And the bank supervisors, many are members of the Basel Committee, are finding that we need to learn. We need to learn how is open banking developing across our membership. It's interesting to look at just open banking in terms of just the banking sector, because as bank supervisors, our top concern is the safety and soundness of the banking system. But it's really within a larger ecosystem, a data sharing economy that's really occurring all around the globe. It's really a revolution that's already occurred. And I think many of us are only starting to realize or become aware of these developments and some of the consequences. So we decided at the Basel Committee to survey our membership about what's going on in your respective jurisdictions. And we found that overwhelmingly our Basel jurisdictions have or planning to have an open banking framework. Now, open banking, what does that mean? It really depends on how you define it. But at the Basel Committee, we wanted to treat it in very broad terms. For us, it is about any kind of sharing or leveraging of customer permissioned data from financial institutions to third parties. So that captures not just API sharing, but also screen scraping. And we're seeing that traditional banking is evolving to open banking, has already evolved to open banking. And now it's evolving to API banking. And that opens up a whole new realm of possibilities in terms of delivery of customer services. So what does that mean for bank supervisors? We are, from our survey, we observed 3 main models of open banking. One is the prescriptive model, which Mexico, the EU are following, where they are mandating data to be shared. For example, in the EU, they're mandating data that relates to payments to be shared with third parties. To facilitative models, which you can observe in Singapore and Hong Kong, where they're not mandating data sharing, but they are facilitating data sharing by providing design and API recommendations. And then lastly, there's the market-driven model, which you can see principally in the US as well as in China, where there are no regulations that at least are not intervening with the sharing of data. And so, but they're all open banking. They just come in various forms, and it really depends on the national and regional factors. And they also vary in scope, too. In the EU, I just mentioned payments only, but in Australia, they are mandating data sharing, not only in banking, but they're going to be expanding to energy sectors as well as telecom. And they're hoping by the sharing of data that this will create more customer services. So back to my original question, what does this mean for bank supervisors? Our top priority is the safety and soundness of our banking system. So clearly, what popped out as our top concern was cybersecurity. Operational risk is very, very important. In a data sharing economy, you are creating additional nodes of vulnerability. It kind of reminds me back to, Chairman Giancarlo was talking about CCPs and swap data repositories. It reminded me back then of how we were trying to concentrate risk to specific nodes, but while doing that, we created new types of risk. And so here we're seeing an expansion of operational risk that goes beyond the banks. It goes to the third parties, and third parties to fourth parties. Also is including cloud service providers who don't fall under, certainly not under many bank supervisors' authorities, but they are the ones storing a lot of this data that facilitate data sharing. And so we are finding that this is a really important area that we need to monitor carefully and think thoughtfully about. Another main concern is also reputation risk. Andres mentioned earlier about how customers probably don't know what they're signing up to. I mean, who reads those terms of agreements when you're like downloaded an app and they're saying, other than Tim, and I'm a lawyer, and I read only maybe one or two of them. Half the time I'm like, trying to handle my baby and try to download this baby app, and I'm like, just click yes, come on, hurry up. And so there is, I think, an assumption by many customers that banks are the custodians of their data, and there is confidence placed in banks for historical reasons, legal reasons, also societal reasons.
The trust relationship
Yes.
with the financial institutions,
Yes.
which takes me to something Andres was mentioning before, which was the issue of consent, right? I mean, how much customers know what they're doing in terms of giving rights to their data. So from your own bank's perspective, how do you ensure that your customers are making informed decisions? You were talking about education and other initiatives, but as a financial institution, what do you do to ensure that?
In practical terms, it means we spend many hours thinking through these issues, both at an abstract level, sort of business practices, what's right, what wouldn't be right, how do we make sure that people don't feel blindsided? And then from a design perspective, how do you optimize to provide the right sort of information at the right point in the customer experience in a way that actually creates the right level of awareness? Because if you take out any of those three components, you're not really getting the job done, right? If there is so much information that it becomes a blur to the point that nobody will actually read through, or if you provide the right information but don't make it obvious enough that people have to step through that and become aware before they can move to the next step, or if you make it so clunky that people abandon and you get a big drop-off rate in your customer experience, none of those scenarios is a good outcome for consumers or for the bank. And so optimizing that it's essentially a very high-level design problem that needs to be solved. And I would say that's one area where banks can probably take a lot of inspiration from the work some of the tech companies have done in terms of streamlining and optimizing for the consumer's attention at the right point.
At the right point.
It's interesting you mentioned that. So, for example, design has become a thing in tech. And in fact, Kleiner Perkins brought on board John Maeda from, I think, Rhode Island School of Design into the partnership. And if you actually look at, let's take two companies that exist today, Dropbox and Box.net. They essentially do the exact same thing, right? They just store files in the cloud. It's a commodity technology. But Dropbox invested so heavily in design, in the customer experience, in the onboarding, that when you actually look at how they trade, there is a premium on Dropbox versus Box, and it's directly related to design. And if you actually track, a variety of NASDAQ companies, you look at who's in the upper right, it's the companies that have actually invested in design as a core capability, and this has become it generates a premium. And it's, as you said that, I thought, one of the other things I learned earlier in my career is that data is invisible. So the value of data really only comes from the actual application layer expression. And when we talk about open data, I think one of the things, and open banking, we've got to basically think about this design layer, because without a design layer that really creates customer intimacy and also facilitates B2B transactions, open banking will be perceived as being valueless, because the value is not in the data's invisible, it's in the experience.
So would design be facilitated, would like to hear from the tech and bank perspective, would it be facilitated by having, what we're seeing in many of the jurisdictions is that they adopt or update their customer data privacy and protection laws first, which underpin open, the layer of open banking that's placed on top. So would you find that to be useful to have customer data privacy layer adopted first, that all banks know what the customer privacy rights are, not only banks, but also e-commerce, health insurance companies, life insurance companies, et cetera. Would that be helpful for designing?
From my perspective, is essentially we need to have the equivalent of the easy button, right? Where by pressing this, you have a degree of confidence that underlying that, there's this cascading set of rules, regulations, and compliance that is being met. So you don't need to push that to the consumer or to the user explicitly, but they need to know that, hey, when I click that thing, it's going to work and I'm covered. And so my sense is that sort of nested design experience, where at least there's an initial run through where people realize what the constituent parts of the easy button are, but that once that's done, that that institutions could work in consortium to basically propagate that easy button. Everyone sticks it on their website. Everyone basically sticks it in their mobile experience, so that you don't have to replicate that, and you don't have to customize it. I like to say is, you don't want to create a band where everyone's a lead guitarist, right? So just do it, do it once, and make sure that you standardize it, then everyone else will leverage the same look and feel.
I think a good simile of that is the very common experience of being able to sign on to or register for an app using, let's say, Google or Facebook. In both cases, it's really easy for the consumer to see by signing on, you are going to be giving this app access to checkbox, checkbox, checkbox. Some of it may be by default, some of it may be customizable, but it's really well summarized. The flip side of that is consumers need to be able to trust that there's nothing else going on under the surface, right? And lately, of course, consumers have had many, many reasons to start getting beyond paranoid about how their data is actually being used. So I think that superficial friendliness needs to go hand in hand with deep, sincere trust.
Yeah. Well, one of the things that I did a stint in public service, and we were talking, one of the things I worked on was basically the impact of AI in the public sector. And one of the key requirements that everyone seemed to skip over was an audit trail. And I think with consumer data, when we're talking about open banking data, consumers should not only have the right to access the data, but there should actually be an explicit audit trail function. And almost like, think of it almost on an annual basis. You should get an audit report. Here's your data, here's where it's been used, here's where it's been propagated, here are the service providers that you've OAuth'd with, here's who they are working with, and here's where your data ended up. I think that sort of requirement would go a long way to basically not only instilling trust, but giving people the ability to get work done without having to get too analytical about, where is my data at this particular point in time.
Right. Sure. So we have a few minutes left, and one of the topics that I wanted to cover was rules of engagement about using that data, right? I mean, that it's a big topic. It's been now, the question is being faced to anyone who's having access to a whole range of new data and defining what can I do with it, what's in some cases ethical or not to do. In insurance companies, that's a huge topic. I'm sure you guys have been thinking about it. Tim, tell us a little bit about that.
I mean, it's a big one. It's very First of all, I think, there has, I've long thought there needs to be, now that data is so openly available, and a lot of this is post 1994. I pointed at everything. It's when Netscape went public, that's when the world changed. 94, 95, that window of time. Prior to that, data was essentially controlled by companies. There was more data inside the firewall than outside. Post 1994, there's more data being generated outside the firewall by consumers. When the social media companies went public, so basically circa 2009 to 2010-ish, it grew exponentially. And there's far more data coming from user-generated content and user-generated media. But along the way, no one ever developed the equivalent of what I call the Hippocratic Oath. Thou shalt not do any harm with this data. And my belief is that sort of industry-driven approach needs to be put in place, where data collectors, aggregators need to explicitly pledge not just privacy, but harm. And these are two very different things. I think there's a thin line that a variety of tech companies are skating right now. We're saying, no, we're keeping your data private. We're just inside the fence line. But whether or not that data ultimately could be used to do harm in downstream derivatives, eyes are off that. So I think that's one of the first steps. In insurance, there's a big struggle. And I say this again, as someone new to the industry. I think across the board in insurance, there is a huge struggle about how to evolve the business in a data-driven world. Because if you essentially step back and look at it, some of the biggest repositories of data are insurance companies. So we have insurance companies have hundreds of person years of data in different categories. And the path that I'm plotting for Transamerica is moving from an insurance company where people sign pieces of paper that have a gold ribbon on them and then stick them in their safe, to actually becoming basically a data company that just happens to have historically been in the insurance market, but may ultimately operate in other markets. So that's the trajectory that we're on, and our colleague companies are all on. But it's a challenge. There are potentially new offerings. I like to look at the goal for insurance should be similar to that of personalized medicine. So if you're familiar with what's been going on with revolutions in medicine and being able to use medical
Tailored
data,
to your
exactly,
own
to do personalized
individual
therapies by
circumstances,
individuals. The insurance industry should have the same goal. So I should be able to basically deliver personalized risk management for you, Andres, based upon your life situation, property, casualty, health, everything. I should be able to give you a personalized package based upon the data stream that we have about you and the derivative data. That should be the actual design objective, but it's a struggle moving from, we sell policies, with, guys with, green little lampshades and, and they all look the same, to providing a personalized service.
So thou shalt do no harm. I mean, that's a really fantastic principle to follow by. But do you see cultural differences?
And what
for example,
harm is.
Yeah, about what harm is, because in China, for example, some of the really big data banks use social media to decide if someone's creditworthy. They can see through social networks if they have quote unquote normal family relationships, then they're considered more creditworthy. And I'm not sure if, how we would feel using Facebook data to decide whether you're creditworthy or not. And so, similarly with insurance, like what if I carried the gene for breast cancer, even though I don't have it, but but I inherited it. How would that factor into an insurance product? Like, what does thou shalt do no harm actually work
And
in operational?
who defines that, right? I mean, and we see increasingly some jurisdictions, Singapore and others, defining a set of principles around that. I don't know, Carlos, was this ever discussed in Mexico?
No, not the principles. It was
How,
more
what you can do with the data, or it was just about access to the data, and then you...
It's access to the data, and it has to be ethic use, but it's not defined in the law or in secondary regulations. So.
The point I made earlier is, I think, with respect to the use of data in a variety of industries, we're hitting our quote-unquote Oppenheimer moment. If you remember Robert Oppenheimer, who worked on a lot of the original nuclear weapons research, when they realized, after they solved the problem of
What they
splitting
had,
out what they had actually done. So they first were so focused on the first order effect of, hey, can we basically split an atom? Can we get fission? To, holy smokes, what actually have we done here? We have unleashed this beast. And I think with their use of data, we're in that same sort of mode where everyone's just trying to get things to work, but they're not thinking about what are the long-term implications.
That's a really.
I'll give you the last word, Andres. Yeah.
Thank you. It's going to be a word of hope that we're maybe leapfrogging the discussion over what it is to do no harm with data by focusing one step further on AI and machine learning and what it means to do no harm there with data as the essential input. That may be what retroactively solves for sort of garden variety data questions.
Just finally, I would like to say that there is another law in Mexico for the use of private information, and there is established what is the use of the information that can be done.
Right.
And the client has to agree on the purpose of the information.
Right. Well, I want to end up on that positive note that hopefully that holy smoke means we have all this data now and we can use it to provide better and more efficient products to the customer. So
That's the goal.
thank you. Thank you for this conversation. It's been great having you. Thanks a lot.
Thank you.
Thank you.